What's up everybody, it's Kevin here from Stock Hours. Today I'm going to be bringing you guys a video on how to recover from trading losses. As day traders, it is impossible to stay away from losing. What we can do though is make sure that our risk is managed and stay away from these bigger losses and maintain these small losses so that our profits can always eat up the losses. Without further ado, let's dive right into the video. So there's a couple things that we need to take into account here. When we were trading, did we have a good loss or did we have a bad loss? What was our trading plan heading into the day? What was our risk management like? And how do we deal with these red trades after the fact? So heading into the first section, good losses versus bad loss. What does a good loss look like compared to a bad loss, right? So a good loss is when we follow our trading plan, we follow every single rule in our playbook, in our strategy, and like I said earlier in the intro, losses are always going to happen. We cannot avoid these losses, but what we can do is make sure that these losses are small, right? So what would be a good loss is when we take a trade that's according to our trading plan, we follow our stop loss, or we even cut those trades when they have red flags, right? For example, when the market is pushing and we're playing upside on Apple, for example, if the market starts tanking and Apple starts tanking with it and it loses its market divergence, that would be a red flag that would make me want to consider getting out of the trade for a small loss. The key word here is a small loss, right? Because if we keep those losses small and our winners are bigger, then we'll always make that loss back within the next one or two trades, right? In comparison to a bad loss, is when we're just on tilt mode, right? We take one or two trades that are in our trade plan. Those trades don't work out. We get super frustrated at ourselves in our strategy because we're so focused on making money that we stray away from our trading plan and we start taking these random trades where we might even over risk on, we don't follow our stops on, we might not even know where the stop loss is, and we're just taking a trade just to try to make that back, just to feel some type of dopamine hit, right? Those are the bad losses and those are the bad trades that you want to avoid taking at all times because that's going to destroy your P&L curve over the years of your trading career. So next up, having a trading plan. As you guys can see, I posted a little screenshot of a sticky note that I keep on my desktop at all times. It shows how many trades I'm allowed to take for the day. As you can see, it's 2 losses maximum. And then below, I say follow your own trade plan. This way, I always follow my own trading plan, and these are the only setups I'm looking for during the day, right? If these setups are not presented, that's perfectly fine. I'll have a cash day. But if they are presented, I will take them, right? I will have my stop loss set in place, whether it be 10 minus 10%, minus 5%, minus 15%, whatever it is. I'm gonna stick to that stop loss. It could even be on the price chart as well, if you want to use like a price action stop, right? Whether it be like a key level, pre-market high, pre-market low, low a day, high a day, whatever it is that suits your trading, right? But what's most important here is that we're following our trading plan, right? Because if we're following our trading plan, then these losses, if we do take these losses from the trading plan, they're good losses, not bad losses, right? Because we didn't stray away from our trading plan, right? Once we stray away from our trading plan, that's when the bad losses kick in, and that's when those bad losses start to eat up at the good losses on top of that, and then it might even eat into your positive P&L throughout the 1 month or the week, which is exactly what we don't want. Next up, we have risk management. Just a quick side note here, not every single day we will get paid from the markets. It is our job to make sure that we have our risk managed. And we do this by following our trading plan, following our entry criteria, and our stop losses. When we follow our stop losses from our trading plan, it's simple for us to make it on the next trade back or the next day we come back to trading. We also need to have proper sizing. Make sure that your sizing is always consistent when you're taking trades, right? You don't want to be sizing up on trades that aren't A+. For example, if I'm taking meta calls and it's doing its own thing, meta, and it's just pushing straight into my key level with a lot of strength and momentum, while the market is staying flat, this is a great confirmation to me that meta is doing its own thing, showing that divergence ahead of the market. So I'm going to size up on this trade to take advantage of it, right? On the flip side, I'm going to use the same example on meta. Maybe it's moving the same way as the previous trade, but it's FOMC day, right? That this could mean that the market's going to be super choppy. So this trade that I'm going to take, even though it's extremely A plus, I might size down because I understand that it's a high impact news day and that taking full size may not be the best decision right now. Next, we have risk to reward. Risk to reward is also important because if we're risking, for example, 10%, but our average winner is 20%, then it only takes us one trade to make back the loss that we just took, right? So risk to reward is also important, but we also need to factor it in with our average win rate, right? Because if your risk to reward is 2-1, but your win rate is only 30% compared to a 70% losing rate, you're not going to be profitable at all, right? However, if you have a 50-50 win rate with a 2-1 risk to reward, you're going to be making your money back and you're going to be profitable. And this all comes from trusting your trading plan. If you do have that 50-50% win rate, you have to accept that you're going to lose 50% of the time. But when you lose 50% of the time, those losses are going to be small. But when you win that other 50% of the time, you're going to be winning big, and it's going to eat up all those losses plus more. How to deal with red trades. This part is the reflecting process after you take a red trade. When you take that red trade, you always want to ask yourself these questions. Did I follow my trading plan? If yes, good. Why did you get in the trade, right? You want to know why you got in the trade. Was it divergence? Was it momentum? Was it extreme strength ahead of the market? Stuff like that. Why did you get out of the trade? Was it because your stop loss got hit? Did you get out too early? Was it because your position size was inconsistent and you oversized on this trade? And that you being oversized, it made you extremely nervous, so you got out for small green or for super small red? What happened in comparison to your trade plan, right? Like, for example, if you were to take calls on Meta at 505 and you wanted a profit target at 508, but instead it broke 505 and instantly dumped, you just want to know like what happened in comparison to your trade plan. Does it mean that your trade plan was a bad trade plan? No, you still followed your trading plan. You can't get the market right 100% of the time, and you're just going to have to accept this in order to become a long-term trader over the years. Next, you want to know what you could have done better, right? Like maybe I could have avoided this early entry right here and followed where my actual alert was to get it in the trade. Or maybe I could have scaled out better in terms of profit targets, right? Maybe you could have stopped out earlier because there were red flags on the trade. Just little things like that. That's what you want to always go back to and reflect on, so that over the long term and going back to your journal, you're going to know what it is that you can do better to keep these losses small and to make those winners bigger. That's a wrap for today's video on how to recover from trading losses. I hope you guys enjoyed. Don't forget to like, comment, and subscribe to Stock Hours YouTube channel. I'll see you guys in the next one. Make sure you trade smart and trade safe. Peace.